Subscribe to our YouTube channel and press the bell icon to get the latest updates.
What's up guys, this is Yazad. Thank you for being here. The most recent stock market crash has spooked a lot of investors, especially the ones new to the market. Millions of young investors have jumped into the market during the post-pandemic boom. An increasing number of trades every day are executed by first-time investors, some as young as even 20, at lightning speed of their mobile phones. Small corrections get these retail investors as excited as offers from Amazon and Flipkart. But a lot of them have never really seen a market crash. And sadly, crashes do happen. And when they do, a lot of guys fall by the wayside. And unfortunately, there are nasty experiences. Today, we are going to be talking about critical lessons from the 4 massive stock market meltdowns of our time. Before we go on, at Equitymaster, our entire focus is on sharing honest and credible opinions on investing in the stock market so that you can make better and potentially more profitable investment decisions. Now, if that's something you are looking for, I recommend you hit the subscribe button to ensure that you do not miss any updates from us. Alright then, let's get to it. The 4 massive market crashes of our time. Whenever the stock market crashes, everyone hears about it and everyone talks about it. In fact, everyone loves to talk about it. Even those with no money invested in the market, they will have an opinion about the crash. The media, it dutifully does its part. Headlines speak of rupees X lakh crore in wealth wiped out in a day. Most Indians who have never even seen 1 crore in their entire lives wonder how so much money can be lost so fast. A market crash, or its evil big brother, the bear market, create an aura of horror in the minds of investors and traders alike. Many have big money at stake when the bear comes calling, and most never had the appetite to take a big loss in the first place. Now, if they didn't sell in time, the losses are usually so severe that they are left shell-shocked. Sad stories of people committing suicide due to these losses find their way into the news. But in all the doom and gloom, what can we learn? How can we use the experience and knowledge gained in these bad times to help us in our wealth building journey? Today, let's look at what happened during the last 4 major market meltdowns and the critical lessons we should learn from them. Number 1, the Harshad Mehta crash of 1992. Now recently, there was a web series that aired titled Scam 1992, the Harshad Mehta story. It chronicled the meteoric rise and the inadvertent fall from grace of the controversial stockbroker Harshad Mehta, the man who became the face of India's 1992 stock market scam, worth 5,000 crore rupees, that rocked the nation. It emerged as the most successful web series of 2020, winning both critical and mass acclaim. However, the show completely missed the real stories of retail investors who suffered the most due to Harshad Mehta's uninhibited greed and gross denial that his bubble will burst one day. The shock suffered by first-time Indian investors was so great that many never even returned back to the market. When the shocking scale of Mehta's manipulation came to light, the market crashed 40%. Never before had the Indian market suffered a blow like this. Many reforms were initiated. The NSE was set up. Trading became computerized. The stock market opened up to the entire country. Stricter corporate governance and banking rules were enforced. But what did investors learn? Well, for many, there was only one lesson. They came to the conclusion that the stock market was one big scam, a gambler's den, and nothing more. At that time, they were justified in thinking along these lines. After all, they had lost their life savings. But those who remained invested, and those who invested more after the crash, learned a very different lesson. Long-term investing can make you rich. Now, the market recovered as early as the very next year. Although the Sensex did not set new highs for a long time, many high-quality stocks became multi-baggers in the 90s. This decade also saw the rise of software firms. Early investors in these stocks are among the wealthiest people in the country today. Despite all the wealth creation that followed, there are big lessons to be learned. 1. Never invest all your life savings into the market. If you do, then a big crash will devastate your financial status. Number 2. Never borrow to invest or trade in the market. The debt will not go away when the market crash erodes your net worth. Don't blindly buy small cap stocks based on tips from brokers or anyone else. There are countless examples of such stocks in the 90s that just disappeared. Now, if the benchmark stock market index doubles in a few months, you should be selling your shares and not buying them. Moving on. Number 2, the dot-com crash of 2000. The turn of the millennium. It was a time when modern thoughts were just starting to replace traditional Indian thinking. India had become a nuclear power, but not yet a modern nation. The same was true in the stock market. New technologies had come in. Computerized trading was taking over from the open outcry system. The news media covered the stock market very closely. Investors and traders had begun to keenly watch global markets, especially the Nasdaq, and how they affected our market. There was this level of sophistication in the Indian stock market that had never existed before. Alas, the Indian investor had not learned from the past. People were swept away in the dot-com craze. The software stocks that had made humble debuts in the 90s, the Infosys IPO wasn't fully subscribed initially, were now the heroes of the market. TMT was the talk of the town. Technology, media, and telecom. Valuations of these stocks went to the roof. It was a global phenomenon. Tech stocks everywhere were on fire. Companies got billion-dollar valuations by attaching the suffix .com to their name, even after raking in losses year after year. A new name was created. New economy. Anything that was not related to technology was called old economy. And then, sure enough, the party came to an end. The Indian stock market did not recover for 3 years. Once again, many thousands lost their shirts. No one is likely to forget the dot-com bubble, especially not me. I was fresh out of school at the time. I just started dabbling in stocks. And oh boy, did I learn a lesson. But in hindsight, that was a valuable lesson because it keeps me away from companies that have never made a profit and yet list at insane valuations these days. So what can we learn from the dot-com bubble? One sector cannot drive the market higher forever. No matter how exciting any new technology might be, the normal rules of valuing stocks will still apply. In the long run, earnings decide stock prices, nothing else. Don't be swayed by narratives and paradigms in the market. Example, new economy. Even high-quality, fast-growing companies can become so overvalued that their stock prices may not recover for many years. Third on our list, we have the global financial crisis of 2008. It's perhaps the most important year in history for any student of finance or economics. It was the year of the global financial crisis, the worst economic downturn since the Great Depression. The wealth destruction caused by this event all around the world was immense. So much so that most people couldn't believe what was happening. Millions of jobs were lost. Trillions in wealth just disappeared as if it never existed. Derivatives in financial markets converted a real estate downturn in the US into a full-blown global recession. Now, countless books have been written on the causes that led to the crisis and its aftermath. But what about the lessons we should learn? All bull markets end, no matter how powerful. The bear market that follows will be brutal. Derivatives trading is not for retail investors. Caveat emptor is true in investing too. Investors must look after themselves. Markets are all interconnected. A downturn in any market can trigger a chain reaction. Finally, the fourth major crash of our time, the most recent COVID crash of 2020. It was a year that will be remembered for only one thing. Now, as the pandemic spread quickly, markets collapsed. Lockdowns became the new normal and economies seized up. Along with consumption, global trade and investments slowed to a crawl. Millions lost their livelihoods all around the world. In a few short weeks, fear had completely replaced optimism in the markets. All hope seemed lost. It looked like the 40% crash was just the start of a long bear market. Many financial experts were convinced that 2020 would be far worse than 2008. We now know that things turned out very differently. So what can we learn from the historic market crash of 2020? First, a black swan event can happen at any time. Markets are so volatile that a 40% crash could be a normal event from now on. Next, don't blindly follow the experts. They cannot predict what's going to happen to stock prices. Number 3, buying high quality stocks when they are cheap is always a good idea. Finally, don't believe end of the world theories. Markets will always recover. So there you have it. These are some of the lessons from the 4 big stock market crashes of our times. I recommend you keep these in mind as you navigate the market. Now at Equitymaster, our co-head of research, Tanushree Banerjee, believes that currently there is a great wealth building opportunity at play in the market. No crash, no correction or pandemic can stop this. Tanushree believes right here in India, 3 hidden mega trends are converging for the first time ever to trigger an economic boom of unparalleled proportions. A boom so powerful, no crash, no correction, and no pandemic can stop India from becoming the next economic superpower. And those who take advantage of this mega shift could potentially generate massive wealth for themselves and their families in the long run. We are talking about potential 1000% gains and perhaps even more over the long term. Tanushree calls this phenomenon India's revival. In fact, she has narrowed down on 3 specific stocks that could potentially offer massive gains in the long run. All you need to do is click on the link here to know more about this mega opportunity. I have also put a link in the description of this video for your convenience. Thank you for watching, and don't forget to hit the subscribe button and to come back next week for a new and awesome video. Happy investing! Goodbye.